Gold's going to be exceedingly sensitive to what the Fed announces when they conclude on Wednesday. The key right now is that it's considered a certainty that there will be an announcement by the Federal Reserve to cut rates to some degree on Wednesday. The question is whether or not they will cut by 25 basis points or 50 basis points. No, I'm saying the gold will be very sensitive to the rate cut. This, of course, is the big move on Thursday. We could easily see it go as high as 26.25 to 26.50.
Gold is expected to react significantly to the Federal Reserve's upcoming rate announcement on Wednesday. It's considered certain that the Fed will cut interest rates, though the debate is whether the cut will be by 25 or 50 basis points. The rate cut is expected to drive a notable move in gold prices, which could surge as high as $2,625 to $2,650 after the announcement. The probability of a 50 basis point rate cut has recently surpassed that of a 25 basis point cut, making gold highly sensitive to the Fed's upcoming decision. Gary Wagner is a respected technical analyst and gold market expert known for his in-depth analysis of precious metals, particularly gold and silver. He explains that the current gold prices seem to have factored in a 25 basis point cut, but a larger 50 basis point cut could cause prices to rise further. Traders and investors will be closely watching the Fed's announcement, as futures traders and money managers now lean towards the likelihood of a 50 basis point cut. In the short term, the target for gold is around $2,625, with potential to reach $2,650. This projection is based on Fibonacci extensions, analyzing the rally that began on June 26, when gold was at $2,355 and peaked at $2,530. By plotting a similar rally after the recent correction, labeled as Wave 3, a one-to-one move was expected, but gold exceeded that target last week, suggesting further upside potential. Gold's movement midweek will depend heavily on the Federal Reserve's rate announcement. If the Fed unexpectedly holds rates steady, gold prices could decline since the market is factoring in a rate cut. While a 75 basis point cut is considered highly unlikely, a smaller cut is expected. Gold will be very sensitive to this announcement when the Fed concludes its meeting on Wednesday. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
We saw the probability of a 50 basis point rate cut exceed the probability of a 0.25% or 25 basis point rate cut. So gold will absolutely be sensitive. My sense is that current prices have factored in A, rate cut, and B, a rate cut of 0.25%. And so I'm not convinced that we won't see gold take off if the Fed cuts rates by 50 basis points. And that's going to be what traders, investors, market participants are going to be kind of glued to their screen or to their television watching the Fed announcement in a couple of days. If it is a 0.25%, 25 basis points, that's been factored for the most part into pricing. However, we could easily see almost anything happen. And the reason I say that is the dynamic change in the CME's FedWatch tool. And what that tool is, that probability indicator that everybody looks at, is they're taking and gauging interest rate futures traders and what they're placing their bets on. And that's where the probabilities are derived. So right now, what it says is that futures traders, the professional money managers, those who are active in trading interest rate futures, now see the most likely outcome, a larger rate cut, a 50 basis point rate cut. A very short term is about 26.25 with the potential to go as high as 26.50. That's based on the sidelines you see, which are basically a Fibonacci extension. So in other words, we look at this leg of the rally that began June 26th, gold sitting at 23.55, up to the conclusion before it corrected 25.30. And so and then you begin to plot from the beginning of the next rally, which we labeled as a wave three. In other words, after this price correction. And so a one-to-one move, meaning if this rally right here is equal to the current rally going on now, then it would be at least a one-to-one move, and we exceeded that last week. Where gold goes midweek will really be tied to the announcement by the Federal Reserve. For example, no one believes this is a likely scenario. If they announce that they're holding rates where they were, they're not going to cut rates. Now, Powell's already said that it's ready for a policy change, so nobody believes that's likely. But if that occurred, we would really see gold prices decline because we're factoring in a cut. If the cut comes in, as you mentioned, at 75 basis points, and I haven't heard that one, I think that's highly unlikely. No rate cut, I believe, is absolutely improbable. 75 basis points is highly, highly unlikely. I wouldn't put any kind of odds to that. And so where gold goes will be really sensitive to what the Fed announces on Wednesday when they conclude their meeting.
Gary Wagner also highlights gold is currently in uncharted territory, with key support at $2,500 and resistance around $2,560, which traders recently surpassed. Despite some sideways movement, gold has remained strong, and the market is now waiting for the Fed's announcement. While technical indicators can offer insights, their relevance is minimal when the Fed's decision is imminent. The market's next move will depend entirely on the Fed, not technical signals like moving averages. Meanwhile, silver's recent high is around $33, well below its all-time high of $50 from 2011. While gold has reached multiple record highs since then, silver has lagged behind. After peaking in 2011, both metals saw significant declines, with gold dropping from $1,900 to $1,020 by 2015 before rallying again. If gold continues to rise, silver may break past $33 and possibly reach $35 to $40, but there's no current indication it will challenge its previous $50 high. Let's have a look back to the interview.
What we're witnessing, can it sustain and hold this area? Can it move higher? Can it find support, say, at 2,600, which is what I believe should happen? But realize this, Jeremy, we're in uncharted territory. Recently, throughout the beginning of the year, when we hit our first top back in April at around 2,500, that was new uncharted territory. Comes down to about $2,350. Then it makes another run for it, but this one has got a higher closing price, but it's still within the level of what this wick was, meaning the intraday high, not a closing price. And then we traded sideways. You can see that here on these daily candlesticks. One, you have alternating candle color, and you've got a price point that is really between 2,500 and about 2,560. So we were looking at support, major support at 2,500, major resistance at $2,560. They took that level out on Thursday. Traders moved it even higher on Friday. And rather than retracing at all today, we're up fractionally a couple of dollars, which is nothing, but we're still in the positive on the day. And that's after traders, market participants, investors have had the weekend to kind of absorb what we've seen in gold over last week. So that's strong. The key is going to be the announcement by the Fed. Technicals are a very good way to gain insight, but the relevancy of a technical indicator when we're waiting for a Fed announcement is almost nil. The market's going to move because the Fed does whatever it does, and not because a moving average is here, not because any technical indicator is issuing a basic signal. It's all about the Fed. Recent action in silver in terms of going to a high have been around $33. Middle of 2011, gold breaks above a level it's never been at, $1,900 per ounce. We look at that now as inexpensive, but that was big. And at the same time, silver moved to $50. What followed after the all-time record highs came in both gold and silver was actually took an exceeding amount of patience, because between the middle of 2011 and the end of 2015, we watched a slow and methodical price decline in both metals. Gold went from $1,900 till the low at the end of 2015 of $1,020. So it basically lost half of its value. And then a rally began, and it built steam and then went to multiple all-time record highs and closes. At the same time, silver never challenged or got near $50 an ounce. And this is the recent high at $33. This is what I would look at. If gold continues to rise, I believe silver will take out $33. If gold continues to run, silver could maybe challenge $35 to $40, but there's no indication currently that silver is going to make a run for its all-time high, which is around $50.
The upcoming Federal Reserve announcement is poised to significantly impact gold's trajectory, with traders closely monitoring the potential rate cut. Meanwhile, silver remains below its historical highs, but could follow gold's lead if momentum continues. How might the Fed's decision affect investor sentiment toward precious metals in the long term? What factors could push silver to challenge its all-time high of $50 despite current trends? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.